Hi, everyone. Welcome back to The Big Picture. I'm Joe Cruia over at Paradigm alongside my co-host Marty, as well as Greg from Amber Data. Very excited to have Ram Ahluwalia, CEO of Lumida Wealth, independent investment advisor specializing in alt investments as well as digital assets. Ram, one of the best crypto Twitter profiles out here. I certainly sing your praises quite a bit. Very significant following. Highly suggest you check him out. We'll link his page in the description below. But before we begin, hit that like, smash that subscribe button to continue help bringing awareness to our podcast. So Ram, thanks for joining us, man. Really, really glad to have you on. As I said, love all your content. So I guess to start, if you give our viewers, a quick overview of your background and then how you transitioned into the digital asset space in Lumida Wealth.
Thank you for the time. Appreciate your show as well. Looking forward to digging in. Flyover in my background is in really banking and capital markets. I grew up at banks. My first job was at a community bank, minimum wage when I was 14. Started working at banks, and I got to see how the piping and plumbing and the machinery worked and what didn't work. That's also what got me excited about decentralized technology and digital assets. Post 2008, after the banking sector had quite a few challenges, they're selling off all these non-agency mortgages that had lost their ratings. And I said, gee, I know these bonds aren't worth 100 cents on the dollar, but they're also not worth 5 cents on the dollar. So I built a small asset manager at the time, buying distressed securities that opened my eyes to alternative investing, right? These are securities you cannot buy on a brokerage account. And I started investing in hedge funds and different private equity strategies. I started investing in buy to rent. And that led me to today is really having an approach of endowment style investing. Think of what Harvard Management Company does or Yale Endowment. They seemingly always have good years. Like, no matter what, it's seemingly always up and to the right because they're diversified, but also they have strategies that have a good positive expectancy. So short answer, backgrounds in banking and capital markets.
Okay, awesome. And then so you transitioned to digital asset space and Lumida Wealth. And I think it's a pretty ideal time to have you on, given the developments over the past week. In the crypto space, we've had the launch of the VanEck ETH Futures ETF, some pretty funny intern commentary from VanEck on Twitter, low volumes, just like your JPEGs, but then also Grayscale, filing for approval to convert the ETH spot ETF. So just generally curious to kind of hear your thoughts. Obviously, Ethereum ETF development still very early days, but then you're also seeing other positive news like the XRP appeal getting denied. Former BlackRock managing director this morning said they expect an ETF approval in 3 to 6 months. So kind of like options, it kind of seems like the direction of travel is there, but the speed in which it happens is kind of still, a little bit of a question mark. So kind of what's your view?
First off, that last sentence is a great summary for market behavior. I feel like I'm in this hurry up and wait mode where I'm just twiddling my thumbs and waiting for certain conditions to present themselves with rates and what that means for asset prices. We're starting to see that play out now. So the limited volume on the VanEck ETF, I see as contrarian and bullish. And the sector has wins, and you see that, of course, in decisive victories for litigants against the SEC. We're talking 3-0 rulings, and again this week too. So the outlook is promising. Digital assets, you want to invest when sentiment is washed out. I did a Google trend search the other day. If you type in crypto or crypto is a scam, there's a lot more volume and interest around crypto is a scam than crypto. I'm a non-consensus investor. Like, time frame matters as well. If you're looking out 2 to 3 year time frame, then I'm constructive. Yes, macro and rates are a headwind to risk assets. I posted this on Twitter. I said crypto assets would bottom before equities. I believe they have. I believe they've done that in September. We just exited one of the worst months of seasonality for digital assets as well. And we're on the end of a rate hiking cycle, and a lot of bad news has been priced in. So overall, I'm constructive on ETFs for Bitcoin. I see that coming next year, perhaps around March. I expect that Chair Gensler will delay and kick the can this month. Of course, Novogratz has a very different view than that. Maybe I'm right, maybe I'm wrong. I don't know. But either way, I'm positioned around these discount to NAV trades because I view those discounts to NAV as a form of like a margin of safety, if you will. It's like a natural pull to par dynamic, to borrow language from the bond market. Eventually that discount's going to close. It's going to go to par. I'm focused on ETHE. We shared that idea at the Bitcoin Miami conference when at a discount of 50%, by the way. I think now it's 30%. I don't check on it often. The last time I bought digital assets, I published it on Twitter. It's ETHE. It was a few Fridays ago. That's how we've positioned. And I think the Bitcoin discount is interesting. It's just not as wide as Ethereum. And there's more interest and focus there. And again, I'm a non-consensus investor. I'm always trying to find that sidelong approach to the thesis. If a Bitcoin ETF is approved, which I think is inevitable and it will happen, then an Ethereum ETF will be approved. That's the bet I'm making. Ethereum benefits from its own Lindy effect. I don't think it'll be considered a security. And to the extent that these are delayed, that's great because we can continue to accumulate and save, but you want to be highly tactical about those moments, right? When ETH was at 1560, that's a good moment. When there was a liquidation event about a month ago, the next day at the close is when I bought ETHE. So when Bitcoin's rallied 28,000, I don't like chasing green candles. It's not my instinct. I look for despair in the market. And again, I have a longer time frame. So I'm happy to provide liquidity because I expect in 2 to 3 years, these assets will perform just fine.
Yes, I do have a question for you, Ram. In terms of your play, I don't know, time frame, you said 2 to 3 years. Are you just straight directional, just balls long, let's say?
It's a great
hedging out that exposure.
No, I'm long only. And the funny thing is, a year ago, my answer to this would be quite a bit different. We had a mix of strategies, but just the nature of the hand that the market is delivering to us today, to use a poker term, keep it really simple. Long ETH. I don't need to hedge with prices at levels that I view as attractive from a longer term perspective. And I know I'm getting good entry points. So no, I'm not hedging. I do like the idea of using options to lower your cost basis due to the volatility. For example, if you can sell a cash secured put with the expectation of being put the asset and use the premium to offset your cost basis, I think those are smart ideas. Obviously, be thoughtful about your counterparty and look at the implied volatility versus the realized volatility. Of course, this is your guys' value book. You deal with this all the time.
Yeah, so right? So we're mainly trading the vols, right? We're not really looking at the price, but I guess my question was more centered around, let's say price is down 80% and you bought ETH and you're expecting the NAV gap to close. Well, and it closed, but price is down 75% from here. But it seems like you have the right idea in terms of a long-term goal and getting the right entry prices on the wrong days, on the right days, sorry.
I'm happy to own the asset. I believe there are long-term secular trends that will benefit the asset over time. One of them is tokenization. We're seeing more and more focus on that. I think certain chains like Ethereum and others will benefit from tokenization. Institutional adoption is growing. They never left. They're still here. We saw this interview with the Franklin Templeton CEO around tokenization and putting Rihanna NFT royalties on chain so you can participate in her upside by crowdfunding her concert tours. So, the future I think is looking bright. Obviously, we're all impatient about not enough application at the application layer. We need to see more of that. We need to see more infrastructure. And of course, we need to see more regulatory clarity and we need to see more congressional action. But the pendulum has shifted. So, if you're a long-term investor, asset prices are cheap when sentiment is dour and pessimistic and people are apathetic. And for that reason, I want to be long. I wasn't long last year, by the way. I was actually when Genesis had issues, I was the first to pounce on that, because in my prior role, I was the head of crypto and digital assets at Cross River. Cross River is a bank backed by A16Z and others. And I looked around the sector and I said, gee, there are these non-banks pretending to be like banks and doing prime brokerage services, but they don't have a balance sheet. They can't rehypothecate. They don't have an interbroker dealer market. So this is not going to end well.
Right.
And so when Genesis started to blow up, then you can follow the chain of contagion and see those issues. But by and large, that's been washed out. There's some small international exchanges that might have issues. I don't see a major source of contagion today. So for that reason, I'm constructive.
Yeah, and I would say that kind of aligns with, the flows that we've been seeing in the crypto option space. So this chart is the Bitcoin cumulative taker open interest of trades on Paradigm. And I know you Ram, you mentioned, the cash secured put, but we really haven't seen really much of that at all on Paradigm. Actually, even very little interest on the downside, at least compared to last year, when there was certainly a lot more contagion in the market versus 2023, where it feels like a lot of that contagion is really pretty much gone. But kind of what we've really been seeing is on Paradigm, like the biggest institutional players in crypto options, is this significant positioning for a Q4, Q1 Bitcoin rally, playing for an ETF approval, intersecting the halving and, obviously implications with the election next year. And it kind of makes sense. I mean, vol is quite low. I mean, is it cheap given recent realize? I mean, no, but like it kind of makes sense if you're looking to position for this sort of bull market. And so I would say that the largest players in the institutional crypto option space certainly agree with this sentiment and what these guys have been doing. So, basically what they own is, the 3 to 6 month maturities in the 30 to 40K strike range. So that's all the those bars kind of like in the middle with the positive values. But what they've been doing against that is kind of selling at the money vol. So they're selling at the money vol in like the 1 month space to reduce the carry of some of these longer dated positions that, obviously performed quite well in Q1, but have been bleeding quite a bit since then. And the other thing that they're doing is, so if you see those bars all the way on the right, people are actually selling a lot of kind of like the March in June, like 60,000, 70,000 strikes, because all those strikes are really, really rich. And they're using that along with the at the monies to kind of fund the belly of the curve in like the 30 to 40K strike range.
Fascinating. This is great. Any other part we talk about March plus time frame, crypto as a sell the news phenomena. So if you buy into the thesis that we see ETFs around that time frame, there's a reasonable strategy to consider selling calls around that time frame. By the way, I love this data as an analytics person by training. I would love to spend time with this. And if you have any historical data around this, this market color is what this sector needs. You can get this data for, as you know, more mature asset classes, but it's very hard to get this market color, and it is very informative, right? So the first thing I'm asking myself is, okay, is everyone positioned the same way? 1, 2, is it crowded positioning? 3, are these smart money investors? Are these retail investors? Are they betting on speculation? They're hedging. Looks like they're betting on speculation. It's a very bullish posture. On the other hand, the sentiment on crypto Twitter is pretty bearish. So that's an interesting contrast to see. So it suggests that, these investors are probably professional investors.
That's correct.
Will work. Yeah,
that's correct.
Yeah, I can give a little more color on this before I jump in. Sorry, Greg. It's pretty much been like this for a while now. People have been selling at the money to fund like the long-term Vega play just because IVs and vaults have been so cheap. In terms of this is like 30, 40K, we've been seeing this for a long time, since January, February. Greg's been writing in the newsletter, vols are down to the right. It's cheap. And you still see the same sort of positioning kind of throughout the whole year. Maybe not in terms of strikes, but kind of the same trade on the institutional side.
How about in, say, early July, a few weeks after the Coinbase victory over Chair Gensler when there was, kind of the local intermediate top. How were options traders positioned then?
Crypto has very specific crypto news, right? So when you saw the Coinbase, when you saw the XRP, you just saw people get balls long calls just for the hype because IVs were so low. And then, of course, right, there's a local top and then everything sells off, right? You have a little vol crush.
Interesting. But similar positioning in that time frame as well? Or as you see here? Or how would you describe that? So they were buying calls. There was a vol crush. But were they betting on upside at that point in time? Or was it not a directional bet? They were just betting on volatility declining?
So
in what time? Go ahead, Gert.
Yeah, so a lot of the positioning that we've seen so far this year has been actually really persistent. So we've seen the street being essentially long upside volatility in Bitcoin, and not really short upside, but volatility in ETH. And then sort of the downside put range of optionality has actually been really light. So there hasn't been sort of a persistent street or dealer positioning that is large enough to have an impact. It's all been on the call side. And the divergence has been between Bitcoin and ETH. And I actually have an interesting question for you, Ram. Just kind of, what do you think about? I know we've seen a lot of divergence between Bitcoin and ETH in 2023. Bitcoin's been a large outperformer. If regulation is really subtle towards Ethereum and DeFi sort of has less transactions or less activity in response, then a lot of the value proposition for ultrasound money or EIP 1159 or 1559 for sort of transactions reducing the ETH supply, a lot of that value prop kind of goes away, and then ETH goes from a deflationary asset flip to an inflationary asset. Do you think that's like a real risk, or do you think that
that's a great question? Right. On the ultrasound money hypothesis, I don't think, first off, that's the best story for Ethereum. Bitcoin is a digital currency. It acts like a digital currency. Tell me the direction of the US dollar, I'll tell you the direction of Bitcoin. And Ethereum, it's hard to summarize. There's like three ways to summarize. So one is it's a decentralized dApp store. Second is it's a platform for tokenizing assets. That's an emerging thesis. Third, it's a long duration platform growth stock. I don't think the ultrasound money is a good way to think about Ethereum. Bitcoin is a zero duration spot commodity. That's what it is. Ethereum is not that. It throws off yield in the form of staking, so it actually has duration. So the drivers of Bitcoin and Ethereum are different, although they share a primary market factor that drives that movement. At some point, that'll change. And you pointed out, Greg, some of the drivers, including regulation. I think the stories around Ethereum are broadening beyond DeFi, though, and some of the court cases are constructive. So I don't share the kind of the bearish perspective around how some of that regulation will break. I think we'll get clarity at some point. The U.S. is slow, but we're starting to see other countries, whether Singapore, Japan, United Kingdom, lean forward. And the fact that the courts have ruled against the SEC actually creates a gap. Like Congress needs to act to fill that gap. And when they create clarity, that'll be supportive of Ethereum.
Yeah, I like that a lot. Something else that you said that was really interesting was the duration of Bitcoin versus the duration of ETH. So if ETH is, say, the tech stock crypto and a higher rate environment would hurt sort of those types of assets, if rates have peaked today and we start going down towards lower rate cycle, maybe next year or so, is there a thesis to be made around the convergence or the relative outperformance of ETH, given rates go down in the future and sort of the tech value in the future value of Ethereum as an asset? And if that's the case, one of the interesting things is the volatility profile between Bitcoin and ETH. ETH is now trading at a discount, implied volatility to Bitcoin. Maybe that's a catalyst for things to flip back. Would you agree with that?
On the latter, I got to reflect on it. I'm not sure I have a view on that. It's a phenomenal question, though. And I would say a few things. One, on the rate impact for these assets, I think the rate impact is less because the collapse of FTX and Genesis accelerated a shakeout and a bottoming process. So that event was significant, and people were under positioned for this year's rally. So these instruments, although rates play a very important role, right? If the Fed were to go yield curve control, I'm not saying they will. I don't think they will do that. If rates go to 8% and they can't refinance, then they will have to do that. But I don't expect that'll happen. Let's see. Might have a new view 6 months from now. Let's see, right? But if the Federal Reserve were to be very aggressive in resuming quantitative easing or more fiscal stimulus, then you would expect to see these asset prices do very well here. But I don't think the rates have as much impact to these assets as sentiment. I think sentiment is bearish, it's negative, it's apathetic, and there are good stories that are happening.
Right. And Ram, you mentioned under positioning, and kind of just to take it back to your question, what did the positioning look like, Q1 into the summer after the Coinbase news? And, Marty mentioned that, it kind of looked a lot like this. And a lot of it has to just do with investor psychology and, frankly, career risk. So the reality is, the largest players in Bitcoin options, so these are institutions who have the mandate, to put it quite bluntly, we better make money on this rally or you're fired, right? Especially after getting absolutely rinsed last year. I mean, to put it bluntly, that's kind of what it is. So what happens is you have this massive sort of FOMO from these players, and a fair amount of these guys did quite well in Q1, and some of these guys that we deal with kind of just missed it, given this sort of teleport sort of price action that we see. So what we actually see, Ram, on Paradigm is when we actually get that sort of spike higher, like we get a candle. And then what do we see on Paradigm? What do we see in crypto options? Well, people immediately come in to buy the upside. And the reason as well is because it's not like in crypto options, you're facing off against, I think you're a Merrill Lynch guy. You're not facing off against JP Morgan. You're not facing off against Morgan Stanley, right? There's only so much liquidity to get your size off in the crypto option markets, right? The balance sheets are much more constrained, and it's actually an interesting phenomenon where the takers, i.e. buy side, have larger balance sheet than a lot of these makers. So as soon as big upside prints start to go up on the tape, it really starts to compound because people are like, damn, this could be the move where we're really going, and I need to get my size off because there's only so much liquidity there for me. And, Marty is a kind of a crypto vol seller OG. He has some pretty funny Twitter commentary on it, but it's something that vol sellers this year have actually had the opportunity to take advantage of. It's this market built on FOMO. So fading these moves by selling into these spikes is something that we see our savvy vol guys kind of do. And because, they're taking advantage of the other side of the trade, which is primarily just driven on career risk, to be frank.
Fascinating. First off, love that insight. It's phenomenal. But my approach is very different from the behavior that you just described.
Right.
So they're
that's why you'll be around in 3 years, and they won't.
Nope. So they're buying call options after these big green candles. I don't understand that. I saw that happen in June, July. Now you're looking from the options market. I'm looking from the spot market. I think you bring the two together. It's very powerful. That's why I'm excited to see this data and join your newsletter and learn more, because what I do is I try to get a read on sentiment using options data in the equity market. So I like to see elevated put call. I don't like this pattern, actually, to be honest, even though I'm bullish on digital assets. I think Q4 we have a rally in tech stocks. I think the correction we're seeing in technology, we actually call that in our newsletter August 1st. This is very easy to call in retrospect, by the way. PE multiple expanded 4 points. The AI narrative hadn't delivered the revenue. You knew Fed Powell chair was going to give it another speech at Jackson Hole. You had 2 months of negative seasonality ahead of you, and call options from retail speculators were high. So he said, all right, tactical underweight. Now, and this is playing out similar to last year. It's an echo of last year. So last year, what did we see? We see dollar strength, doesn't hurt. That hurts Bitcoin. We saw rates going up. We saw energy perform, and we saw tech stocks down. We see an echo of that this year. It's a less intense echo. And the timing overlaps nicely. It just happens to be the case. And if you follow, if past this prologue, then sometime next week, we start to transition to bull market. And I'm starting to see the vibes that change in terms of hedge fund activity. But this pattern, though, I would agree with the thesis of fading some of those longer call options, although I'm bullish. I have to process and reflect on what I'm learning on the fly in this call.
Right. Makes sense. Well, okay. I mean, we're coming up, I think, on 30 minutes. I mentioned we like to keep these, on the shorter side, nice and punchy. I think that was packed with a bunch of amazing information. And Ram, thank you so much for joining.
Well, thank you all, too. I learned a ton. This is fantastic. Can't wait to dig in more into the data and keep up the great work. Thank you for everything you do.